So if you look at this, you will see that this is like a scattered graph here. If you look at it from 2019 to 2025, the examiner bring question within the books of original entry. Some were full mark question, like in 2023, you're seeing a 15 marker here and a 5, so that were 20 marks. Like in 2021, if you see there were 10 marks here. So within 2019 to 2025, the examiner did bring books of original entry. Now, these questions could come like a whole question, so it could be like part of a question of another question, as I was explaining. So you need to know your books, especially like the petty cash book and the three-column cash books, and these books like the standalone questions that will come. Another thing I want to show you is what we are looking at right now. But partnership often comes so that these are questions we'll look at later on. But the control system, which is like bank reconciliations and what we're looking at today, the sales ledger and purchase ledger, if you notice, they come from since 2021, the examiner repeated these questions. And these questions come regularly with a lot of marks within it. They came as a full marker question and they come as part and portion of another question as well. So it's important to know these. Some people students just overlook it and try to focus on just the partnership with the manufacturer, the ones that get them trouble. Now, another thing what I saw is that the examiner tried from since 2023, they started to bring questions on payrolls. So they either bring it in between or they bring it as a whole part of question. Like you had 10 marks on this question here, but they skipped 25. So you could look out for something in payroll. But manufacturing, they also bring whole cost in manufacturing, but I haven't seen anything on inventory as such. And I know inventory is a part that gives the students a lot of problems. So that is something we have to look at as well. So inventory is another question we'll need to look at, right? Well, limited liability is a big question that is in corporations, nonprofit, and three different sections. And once you'll find that they always get something coming from there. So once again, this is the section we are looking at control system. And if you notice how important it is because the examiner bringing it part of a question and a whole question. So you all need to know the controls, especially a sales ledger and purchase ledger control, or even how to deal with debtors and creditors. Is very relevant within the exam structure. If you all want a copy of the analysis that I have here, the years and the questions with which topic area it fall under, which section of the syllabus it falls under, you all could also ask me for it. All right, moving on to our section today. Today we want to be able to cover control systems. At the end of it, the objective is to be able to know your sales ledger control accounts, your purchase ledger control account, to know which items to add and what to subtract, and how to reconcile with a list of debtors, and to understand what your balance is and what may differs. But before we do that, I just want you all to understand what your daybooks are and why do you have a control account for a sales ledger and a purchase ledger. So your daybooks are your sales daybook, your purchases. Now they call it sales journal too. So do not get confused with the sales journal or purchase journal, right? Sales daybook, purchases daybook, sales return, your purchase return, petty cash, column, and general journal. This is 1, 2, 3, 4, 5, 6, 7. There are 7 books. Please know them and what they relates to. Just to recap very quickly, I always tell students, remember, sales record credit sales only, not credit of an asset or anything else, but just your credit of the goods you are trading in. Goods that are trading in is considered credit sales. If you sell a motor vehicle, something in credit, that is not credit sale. That is sales of an asset. If you sell office stationery, that is not credit sales. That is still sale of a office stationery, right? So you have to credit that account, but you do not credit your sales account. So say as well as purchases is purchases of goods that you are trading on that you purchase on credit. That is what goes in your purchase daybook. Not if you purchase an equipment on credit. That will not be recognized there. That is recognized as an asset, right? And your sales return and your purchase return, well, those will go in this book. And petty cash is for your small payments. Three-column cash book for your cash payments and your checkbook or your bank, sorry. And general journals for everything else that does not record here. Now, in your sales ledger control and your purchase ledger control, why do we reconcile that? Is because from the sales book, you transfer the individual transaction to your sales ledger, accounts receivable accounts. And each individual that you sold goods on credit to, they are assigned an individual account in your sales ledger. Same thing as your purchase ledger. Each person you buy or supplier you purchase goods from on credit is recorded in your purchase daybook, but then it is transferred to your purchase ledger, and each individual supplier has a purchase ledger account, right? So each one has an account so that you can control how much that person owes you. But at the end of the day, in your trial balance, do you see an account for A, B, C, D, E, F, G, all the whole alphabet and coming back and they double it? No. You don't see an account for each person. All you see is a total sales and a total accounts receivable, a total purchases, and a total accounts payable. You see the total of accounts. So these total accounts that you see in your trial balance must balance back with the individual accounts in that you transfer to the sales ledger and the purchase ledger. And hence the reason they have the sales ledger control account and the purchase ledger control account. Because each individual account, when you tally each one, with the returns and your payments and everything else that happens within the account, it must balance off. Right? So each thing must balance off when you add back these accounts. Sorry about that. So looking at your control accounts now, these these items that are listed here within these two control accounts that I drafted for you all are all the activities that take place within these accounts. For your sales ledger, now I put in more than one name so that you will be able to identify it. Sales ledger deals with who? The people you sell goods on credit to. So they are really your debtors. Those are the people who are owing you money. That is your accounts receivable. Now, the word sales ledger confuse students and they think that they have to put it on the credit side because they think in a sales, because sales is normally recognized on the credit side. But this does not account for your sales. It actually accounts for your debtors, the accounts receivable portion of it, as well as your purchases ledger is not your purchases account, but your accounts payable account. It recognizes those that you are owing. Those are your creditors. So that is one of the things you have to remember when you see in the exam sales ledger. Do not think it's your sales account. Automatically recognize it as an accounts receivable, which is a debtor account and a current asset. When you see the actual purchase ledger account, you have to automatically think that it is a creditor, which is accounts payable and a current liability. And that way you will not confuse yourself as to what to debit or what to credit. Now, this is a complete listing of what to be debited and what to be credited here. So on the debit side, the major balance you will find will be the amount that is really being owed to the company, the total accounts receivable. However, occasionally there is a credit balance brought forward for debtors who may be overpaid on their account or whatnot, and the company may be owing that individual some money. So at the end of the period, so they recognize it on the credit side. And on a normal basis, it will be a insignificant amount that you'll have to account for, which is a small amount. So you will have a debit and credit, but the main balance is the debit balance on your sales ledger. Whereas the main balance on your purchase ledger will be on the credit side, which means to say recognizing your liability, your current liability for the accounts payable. In this case here, now it will be anything that you have overpaid, right? So let me just take all this both forward. I like both down. Some accounting use both forward and some use both down. So the same difference, but I'll use what your students use. Right? So now looking at your sales ledger, you'll recognize everything that increases your debt. Everything that increases your debt will go on your debit side. Not your debt. Anything that increases the amount that is being owed to the company will go on the debit side. And as this debt decrease, or well, the debtors accounts decreases, it will go on the credit side. So like your returns, bad debt written out, discount is allowed, your check payments, contra off, this will go on the credit side. So to increase the sales ledger, it's only debit, and to decrease your sales ledger control accounts, it goes on the credit. And is the very opposite for your purchase ledger control account. To increase your creditors or accounts payable control account, it goes on the credit, and to decrease it, it goes on the debit side. So these are little tips that you all can keep with yourself so that you all remember what goes on the debit and what goes on the credit. Now I can copy and paste this into exam type questions so that you all see how easy, once you know this, is just to plug it in. But we will work through the question as well, right? So I have three questions set off here. I don't know if we'll be able to complete the three, but it's three different approach from the examiner. So hence the reason, once you know the approaches and you know how the examiner approach these questions, you will be able to complete it in the exam properly. So 1 minute, huh? So let's look at June 2017 past paper question. I hope you all have past paper that you all are working on. So June 2017. This is question one. This is question one here. And the examiner, well, first they ask for you all to list two journal entries, which is like what we just look at here. Your books of original entry, sales journal, purchase journal, your sales returns. So that was a giveaway, 2 marks. List two journal which would provide some of the information given below. The next part of the question asks, using the information on page 4, prepare the accounts payable control account. And next part is using information on page 4 as well, prepare the accounts receivable control account. So you have accounts payable and you have accounts receivable. Now I always tell students, read the requirements first, it saves you time. So that when you go to the question now, you know what you're looking for to pull out from this question. So list two journals. Credit purchases. What book that come from? Your purchase day book, right? Now you have amount owed to accounts payable. That would be a general defective device return to sellers. So something is being returned. So you have either your sales return or your purchases return, right? So you have books here that you could already start writing down by when you look at the question. You have your purchases book. Now I can't write good with this pencil, so forgive me. Purchases day book. You have your sales return book. Now the examiner asks you for two. You don't need to write any more than what they ask for. Just write what the examiner asks for because you want to save yourself some time, right? Now moving on and reading the question, you know the two accounts that you have to prepare for. One is accounts payable control account and one is the accounts receivable control account. So as you read the question, what will save you time once again is start to populate the account that you have to create. So amount owed, let us read from the beginning. Rahali Security Enterprise buy and sell security devices only on credit. During the month of May, some accounting information was produced as follows. Some accounting and not all. Amount owed to accounts payable on the 1st of May was 2390. So amount owed to accounts payable, which side of the account will this be going on? On the 1st of May, your balance brought down would be 2390. Do you know what side of the account that will go on? Because it's accounts payable, you know it's on the credit side. So you have your balance brought down for 2390. And on what day this was? The May the 1st. Credit purchases for the month total 24,560. Now, if you have credit purchases, what would have happened? You would have debit your purchases account and you would have credit the creditor's account, which is your accounts payable. So hence the reason increasing your accounts payable or your now you know it as your purchase ledger control account, you will credit that account. So you have your credit purchases of 24,560. Defective devices returned to the seller. So that means that you bought goods and it was returned. So this is a book that you could put in here as well, which is your purchases return book, right? It was returned for a value of 230. So this would what would this do? This would reduce your accounts payable because you're not returning some of the goods you bought that is it's defective. So you have purchases returned. A debt to a creditor of 8,770 was settled by check for 8,300. So you settle a debt, you owing somebody 8770, and you settle a debt paying by check for 8,300. Do not overlook the word that you settled this debt. It was settled. That means to say you're not owing anymore. Although it was 8770, it is now settled. So what that means, by bank, you settle a check by check for 8,300, but the difference would have been a discount that you received. So immediately you book your discount. Now I'll do my maths right here, right? So it will be 470 is your discount. Amount owed to accounts payable at the 31st of May was 4,900. So now they're closing off the accounts for you. They're telling you at the end of the month of May, May 31st, your balance carried on is 4,900. They didn't actually tell you balance carried on, but they're telling you at the 31st of May, the amount owed as accounts payable is 4,900. So you need to pay attention to the item that when you read it. Amount owed to accounts payable on the 31st of May is 4,900. So if your bought down balance is normally on the debit credit side for accounts payable, then your carry down balance will be on the debit side. So on May the 31st, you have a balance carry down of how much? 4,900. Now when you try to balance this account and you add both sides, you'll find that the total here is different from the total here. So that means it says something is missing. What is missing? Remember, the bank payment that you make here was only identifying for one individual. It didn't identify the payment on the account for everybody else. So that payment is what missing. And the examiner expected you to recognize that the difference, the balancing figure was your or total payment, other payments to creditors. So that is what you're supposed to recognize before you put down your balance carried on. So I will change this here now and put it as my balance carried on. I'll put my 4,900 here, but find my balancing difference and put it as bank, showing that other payment is a balancing figure. So when I minus from both sides of the account, I now have 13,050 as my balancing figure, saying that I paid my creditors this amount of over the period of May. Don't forget, after May is what? June 1st. Your balance brought down now will be the balance that was carried on, which was 4,900. And this was a total, I believe, of 7 marks. So once you're reading the question, you can populate the information to your accounts payable. But one thing you have to notice, in this question, the examiner's approach did not say, hey, this is your balance brought down. They actually told you on May the 1st, this is it. Secondly, this question also, one of the troubling thing was they actually tell you to settle by check, but it didn't tell you how much was the discount received. You have to remember to calculate the discount received. Finally, they didn't say this balance is your balance carried down. You have to recognize on the 31st of May means it says the end of the month. This will be my balance carried down. But what would be your balancing figure? The balancing figure would be the payment unless it identify for you your difference in your accounts payable account is X, Y, and Z or set off or something because they are contras and they are set off. Unless they identify that for you, you will use your payment figure, your balancing figure as your what you would have paid during that period of time. And that is the close of your accounts payable account. The accounts receivable account is very straightforward as well. However, in this question, they started off with saying what your credit sales are. Now, here they start off with a balance brought down. Here they say credit sales for the month. So when you sell goods on credit, what do you normally do? When you sell goods on credit, you'll normally credit the sales account and debit the accounts receivable or the debtor account. So the debtor is supposed to be debited. Your accounts receivable control account deals with your debtor or your sales ledger control account. So yeah, telling you be careful of the how you interpret the words that they use, because sometimes that will make you think that you have to go on the credit side and start plugging in figure here. You're not going to recognize the sales. This is not your sales account here. This is your debtor account. The sales ledger control account is your debtor account. Your sales ledger control account is your accounts receivable. It is an asset. So you have to remember that. Now I'm leaving out one line. The reason being, on May the 1st, there would have been a balance brought down for your debtors. So let's leave that out, but we don't know what that is as yet. However, we know what our credit sales for the month is, which was 55,460. They also state that discount allowed during a week-long sale was 250, so they allowed some discount. Of 250. So you're reducing your accounts receivable. I just assume that you all know discount allowed goes on the opposite side of what you're owing. Because here is, I mean, what is being owed to you. Here is what is owed to you. And if this is to be reduced, you have to put it on the opposite side. So as you reduce your asset, you credit that account. Accounts receivable on the 31st of May was 6,170. Before I write this, they have an amount paid by accounts receivable totaled 53,140. So let's put the amount paid by accounts receivable first, which we would have deposited in our bank, or you could have put amount paid for 53,140. And I write the incorrect one, 53,140. And let's go back to our accounts receivable on the 31st of May. Once again, they did not tell you this is your balance carried on, but you have to note that it's the 31st, so it's your balance carried on at the end of the month. Now, your accounts receivable normally has a debit balance brought down. So on the 31st of May, the carried on balance should be on the credit side. For 61.17. Now, as we add both sides, this is when you're going to find what was your beginning balance. So you see here, they automatically leave this figure off for you to be able to insert this figure. So now you're not looking for a balance in bank figure. You are looking for a balancing figure as the beginning balance. What was your beginning balance when you add both sides? So minus in the totals, 59,560 minus 55,40. The difference is 4,100 would have been your opening balance. So now both sides of your accounts are equal when you balance your account. What you found was, as the balance brought down, was a balancing figure. So you see, in controls account, when you input all the correct information on the debit or credit side, the balancing figure should be the accurate figure that the examiner is looking for. And once again, June the 1st, you bring down your balance. And I bring down the wrong balance. It's 61.70 you need to bring down. Right, so the balance is carried on, you bring down that balance. And that will be your full marks for this question. So the examiner trick in this question was number one, they didn't identify what your balance brought down, your balance carried on was for you. You need to be able to understand the beginning of the period would be your balances brought down, and the ending of the period would be your balance carried on. The second thing is when they actually account for discount, they deliberately did not say the difference was a discount received or in this case, you need to identify that this is a discount that you receive and you must account for it. Do not leave it out. They left it out so that you will as an individual has to identify it and then put it into in your solution. And then your balancing figure here, when you add both sides and you say, hey, my account not balancing, and they give my carried on balance, what to do? The only thing to do is to say that this is what was paid during the period of time, unless there are another assumption that is given by the examiner. In this case, they did not give the balance brought down, right? But they give you all the other information with the balance carried down figure. So your assumption now would be your beginning balance that the examiner deliberately left out would have been the balance brought down, the difference, right? And that is it for this question of June 2017 on controls, sales ledger and purchase ledger. Now look at this nice question here. Let me just split the screen. This is June 2018. And June 2018 now bring another approach for you as a student. Question 3 was 20 marks. So as I was explaining, sometimes it become part of a question or it could become a whole question. And this 20 marker question here gives you 11 marks for sales ledger and 9 marks for the purchase ledger control account. But it gives you practically nearly everything you can find in your control account for sales ledger and purchase ledger control account. So if I look back here now at what I give you here, all these items here, if I copy and paste it into that, we can start plugging in some of that information because most of these information here is what the question would be relating to. And we could give it a try so you will see how important it is so that you all know what to put, how to revise this. So let me just include it. I don't want to distort my information, but where do I put it? I already have my equal sign, so that is the reason why. Is it much? No. What I will do, I will insert it here. Okay, so it kind of be distorted a little bit. And let me move all the split screen so that I can actually help you all look at it differently. Right, so we could zoom in and we could zoom out. Right, good. So your sales ledger control account starts with beginning balances, right? Both accounts have a beginning balance. And the examiner neatly put it in for you. If you look at it one at a time, you can pull out the information that you need from this question. Now, it's 2017 is the year. So I'll just put 2017 to the top, if it will allow me to do so. Right. And put your beginning balance. So balance on the 1st of October 2017, October the 1st, 2017, your balance brought down. Now, I start populating, but let me just remind you, your sales ledger control account is what again? Not your sales account. It is your accounts receivable. It is your debtors account that you're balancing here. That means it is an asset. So when your asset increase, you debit. When your asset decrease, you credit, right? So it is an asset account we're dealing with, not your sales account. Once again, so your sales ledger debit balance brought down was 42,680, and your credit balance brought down was 950. Moving on, let's pull out the information we need for your sales ledger. Your sales day book total for October 2017. So they just tell you sales day book, but you're supposed to know what your sales day book record. What does your sales day book record? All of your total credit sales to your debtors, to your accounts receivables. So that means your asset account will be increasing with your credit sales for a total of 102,900. Then your return inwards day book total of for October 2017 is 4120. Your return inwards, once again, is your sales return. You sold goods on credit, and now the individual return goods to you. So that is return inwards into the company. So if a debtor if a debtor return goods to you, that means to say your debtor's account will reduce by that value. So to reduce the asset, you will credit. So you have sales return. For how much? 4120. Moving on, let's look at anything else for sales. Return outwards can be for sales, right? That would be purchases. Receipt from credit customers. Who are credit customers? Credit customers would be people that you sold goods and credit to, which will be your debtors, right? And one word that if you're confused, receipts. Receipt is payment that you receive. Customers are people you sell goods and credit to. So if you receive money from these people, you would have debit bank and you would have credit the other account. If you're not certain how to input it into your account, sales ledger control account, you already know your bank will be debiting, so this account will be crediting. However, once again, your debtor's account is an asset, and if your debtor pays you, it will reduce the account. To reduce that asset, you will make a credit. So this will show that you get money into your bank for 92,400. Payment to your creditors will be in your purchase ledger because you're paying creditors. Refunds to debtors who have overpaid their accounts. Now going back here, you will see that I have refunds in this as well. So if you have this as a guidance and you're working with this, you will see that this template here shows that when there is a refund to a customer, you will debit the sales ledger control account. But to explain the reason why it is on the debit side, if you refund a debtor that overpaid the account, looking from the internal part of it, from your business, when you pay money out, your bank or cash flow will decrease. So if that decreases, you'll be credited. So the other account will be debited. So if you're not certain, I always tell students, if you're not certain of what's going on, always ask yourself what's happening with one of the account. If you could identify one of the account, what's happening with it, and you know it's credit or debit, you will know the other account will be debited or credited. In this case, a refund to a debtor who has overpaid their account, it means to say that your money will be leaving your bank or your cash, and that cash or bank account will have a credit entry. So therefore, your sales ledger will have the debit entry. So refund, if you cannot remember, is an easy way to analyze, right? Refund to customers, $300. Dishonored check received from your debtors. So what is a dishonored check? If you do not know what is a dishonored check, now I have it here in the template to show that it's debit, right? But dishonored check is a check that you receive and the bank didn't honor it, meaning to say didn't clear it. And there are several reasons, and it comes in the exam asking you give one reason why this check may have been dishonored or why it may not have, or why it may have been returned. And there are several reasons. Sometimes the person who gave you the check don't have sufficient funds to clear it. Or there could be a typo error on the check itself, or the check could have been still dated and nobody recognized that it was still dated. Enter it, put deposit it, and then the check has to be returned. So there are several reasons. Know the reason why because it comes in the exam. So a dishonored check means to say that the check that you would have received from the customer is no longer credited and would have reduced the account, but now that customer is still owing you, so you have to increase back your sales ledger account. And once again, in your bank now would have what? What would have happened to your bank? You would have to credit your bank because return in your bank account. So if your bank account is reducing by this check being returned, then you have to debit the other account. So if by chance you're not certain, you check and see what would happen to your bank account, right? And that is for dishonored check. Well, discount allowed or this, let me just tick this so we use that. We use the 300. I like to think, and I tell students to do the same thing because when you go on to the other question, you now look at what you didn't tick. So you don't have to read over everything to find the missing figures, right? So you tick as you go along or cross it out knowing that you used that already and you're not going to be using it again in the other part of the question. Discount allowed. Who can allow the discount? You will allow it. So who would you allow it to? You can't allow it to a creditor because you're paying the creditor. You could only allow it to your debtors. So discount allowed is for the debtors. What happened to the discount? It reduces their account. So when an asset reduces, you credit. And I'm explaining also that you wouldn't have to memorize a template. This template to memorize is a lot. If you have to go through it over and over, it's good that you can, but it's also good that if you make sense out of nonsense and you have common sense application skill when you're doing your question. So discount allowed, 2,800. Bad debts written off. Okay, so a customer is owing you some money and they did not pay you on time. So now you have to write off that debt. What will happen if you have to write it off? It will reduce your debtor's account. So in order to reduce an asset, you will also credit. It is in the template for 860. Interest charge on customers overdue account. So your customer is your debtor, right? Those are the people you sold goods and credit to. They're not your supplier. If you charge them interest, it means to say you give them a discount when they pay early. Fair, right? Fair is fair. So if they pay early, you give them a discount. So if they're taking longer than your stipulated time period, some people give net 15 days, some people give net 30 days, some people get that 60 days. So if it is they're going beyond the period of time that you give you, there's this fear that they charge you interest. So the interest will increase the debtor's amount. It will increase how much they are owing you. So therefore, you debit your asset. 160. Right. And moving on. The final thing here is the balance at the 31st of October. Your balance at 31st of October will be your balance carried down. And here we have sales ledger, debit balance total. We do not know how much it is, but your sales ledger credit balance total is 590. So where would we put this 590? Would you put it on the credit side or would you put it on the debit side? Because it is a credit balance at the 31st, you may want to go and put it on the actual credit side. But remember, your credit balance here is a debit balance here when you bring down that balance. And what they're referring to here in the ending is actually where the balance supposed to be. And your sales ledger control account is for receivable. So your receivable figure for here, the main figure should be a debit balance. So the missing figure that you see here with the question mark is your main figure. The balancing figure on the credit balance here that they're talking about would have been what overpayment that is still remaining that you have to refund, right? So this you put on your debit side so that it will be brought down on your credit side. So balance carried on would be how much? 590 because this is at October 31st. And the credit balance now at November the 1st it will be on the side that the examiner told you that it is, balance both down. So this here actually shows you that your balance both down is on the credit side of 590. So it is recorded on the correct side. So you see credit balance here? This credit balance is really talking about the balance both down, right? Not the balance carried on. So if it was supposed to be both down on the debit, then the carried on will be on the credit. So the balance of accounts again, once again, what you do, I always tell students, add the debit sign, write it in pencil for anything that you're balancing. And this would be 14,7830. And you add your credit side and you find the amount, which is 101,130. This is a one, eh? Right? And when you minus both, you will find the difference to put on the side that is less. So we know the missing figure was supposed to be here with your balance. Carry down at the end of the month. Now, for the date, all the missing dates here, all you have to do is you could put is October 31st. You don't have to put October. You don't have to put you don't have to leave it blank and you don't have to assume a date. You just put the end of the period because most of these balances would have been balances that you would have taken from total books balances. So you would have been taking it from a balance at the end of the period. So all of these here, all you have to do is just put October 31st. So let's balance this off again and see what is the total. So here's is 47. Let me find my difference. I am minusing the same thing, 14,780 minus 101,1330. So, and the difference is 46,700. Right? So this 46,700, do not forget that it is your actual accounts receivable value for November the 1st, balance brought down for 46,700. Okay? So far, so good. I don't think we will complete all the questions, but I could do a quick review on the others. I have the solution already. Okay, so going now to the purchase ledger control account. We will have the opening balances for this as well. So we did with, so now purchase ledger debit balance total is 620. So let's put it in. We know it's October 1st. Balance brought down. It's how much? 620 any debit time, right? October 1st. Balance brought down. And it's 28,360. Right. So why is the main balance on the credit side for your purchase ledger control account when your purchases normally has a debit balance? Because this is not purchases. This is your creditors we're dealing with. Creditors who is a liability. Now you recognize that I'm repeating myself. This is for your purpose, right? So the credit balance is the main balance here for your purchase ledger control account. I would have copied over and bring over that template, but you will see how useful the sales ledger one was. So now you'll know to use the purchase ledger template as well, right? And therefore, as we go along, we just look for the information that was left off. We don't want to be reading over everything because we want to save time. So now we have a purchase day book, which would be credit purchases, meaning to say you buy goods on credit. And that is your total of 65,950, which means to say you would have debited purchases and you credit your creditors. Credit purchases of how much? 65,950, which is your creditors, right? Return outwards means to say you return goods, so purchases return. You're reducing your liability for the amount that was being owed, 5390. Now, by now, I assume that you all know how to treat sales returns and purchases returns, right? Payment to credit suppliers. So here they actually give you how much you pay to the credit suppliers. You can actually put payment or you can put bank. As the assumption is there, right? 75,000. Means to say you would have credit your bank and you would have debit the supplier account, the supplier's account, which is your creditors. So let's take that off. We use that discount received. So you receive a discount. So it will reduce your liability. So to reduce your liability, you'll credit that account. Discount received of 4,200. And moving on, interest charged by supplier. So it's fair that the supplier charge you interest too, right? When you don't pay on time. So you have to increase that account. So you're increasing now the liability by crediting the liability account. Interest charges 240. And your balance brought down figures, they give it to you once again. Now remember the debit balance, where would that be? If the debit balance is here for how much? Purchase ledger debit balance is 700. At the end of the period, which is November the 1st, well, the beginning of the period then, because balance brought down. For 700, that means that the balance carried on should be here, October the 31st, for the 700. Once again, the dates that you could use for all the others could be the end of the period because this is your total column books that you are actually pulling these total figures from. So no fear of putting October 31st for all. Right, so what is your balance brought down figure? What is your true liability? Now, this is not a, remember in this question here, they wanted you to find out what was your bank payment, and here they want to find your opening balance, right? In this question, they actually gives you the all the other information for you to populate the increase or the decrease. And what you are supposed to find now is your balance carry down figure. And in other words, it brought down at the beginning of the next month. So always erase your pencil marking like I did not erase mine. So once again, to balance your account, to find the difference, you add the debit side, write it in pencil to the top here. You add your credit side, write it to the pencil to the top. Find the difference, right? Here minus here. Now what I tell students to look at, where the account, decide where the account have less. You know that is where you have to put in a balance to make sure it is equal. So here we'll have the balance carried on. October 31st. And the difference is 10,040 in this case, right? And both sides are now equal. Now notice one thing with accounting, our students, your equal sign must be on the same row when you're balancing any account. Regardless of what type it is, your equal sign must be in one row. Three column cash book, your ledgers account, your individual ledgers account, whatever you are balancing, make sure the equal sign is on the same row, not up here, down here, all over like they vex with one another, right? And November 1st, balance both down will be 10,040, right? So that is it for this question. And what it was, June 2018, question 3 for 20 marks, a full question on control accounts. So you see how important it is for you all to know the sales ledger and the purchase ledger control account. You see how it relates to your day books. Back again, once again, as I was showing you all here, your sales day book transfer to your sales ledger is individual accounts. Imagine a business with thousands of suppliers and thousands of customers. How could they get a final balance for each person in a trial balance? How could they know if it's accurate if they don't keep a general ledger total account? So the total account is what they actually use in the trial balance. Otherwise, you see a financial statement for 1,000 employees when you're going under current asset and seeing one total receivable. You see a receivable for A receivable B, a receivable for C, D, E, F, G, H, I, J, K, all the alphabet in that you have and plus. So they have a total account, and hence the reason it is important to control those accounts and make sure the total balances back with the individual balances when they are summed up. Now, June 2021, question 1, this is part of a question, was 8 marks. It was not a control account, was not a whole entire sales ledger control account, but an individual debtor account. And I classify it under ledgers account, but is also a control account that you should be familiar with. If you don't know how to control an individual account, well, then you will have problems. So this debtor or accounts receivable was Anil. And I get some information here for him as well. So I'm showing you a different approach the examiner came with. They didn't come with the entire whole control. And they ask you to use the form provided below to prepare Anna's account in the books of Metro Trading for the month of May. Show the balance brought down on June the 1st, 2021. So they ask you to show the balance and everything, right? So you're going to use the same form here to populate the information and get your balances. So Anna is a debtor who owes Metro 5,600 on 30th of April 2021. So April 30th means to say on May the 1st you have a balance brought down for him. Let me just put 2021 here. So on May the 1st, your balance brought down would have been 5,600. Don't ignore that balance is important. So the following information was extracted from the book of Metro for the month of May 2021. You sold some merchandise on credit panel. The sales invoice is 3450 less a 20% trade discount. Now remember the difference between trade discount and cash discount. Trade discount is when you reach to the person and you negotiate, give them discount number, what going on? You know, we good, so, and I will buy from you and blah, 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 and whatnot. So before the invoice was generated with 3450 and you book 3450, you get a discount. So it's not 3450 you will be booking in your book. You'll be booking the difference, less the 20%. Well, in this, yes, less than 20%. So you sold goods on credit to Anil because he negotiate with you for an amount less 20%. So on May the 7th, you have credit sales. And what you're going to put here is not 3450. You're going to put 3450 by 80%. Now, I do quick maths, right? But if you cannot, you calculate 20% of it and then you minus that value from it to get the difference. Now, do you record a discount? No. Trade discount is never recorded in your books. So hence the reason they put trade discount there for you to know that that is not going to be recorded. So you're not going to go on the other side and record a discount for that. Right? That is not to be recorded. Only cash discount is recorded because you would have recorded an invoice into your system before you negotiate, after you negotiate, sorry, and you get the value of your invoice, you would have recorded in your system. And now, when you get a discount, when you pay in the creditor, when you're being paid, that is all being paid, or you paying, either or, right? You get a discount then. That is the a discount that you record, which is discount allowed and discount received. You do not record the discount that is negotiated when you actually making the sale or doing the purchase. Anil settled on May the 9th the amount outstanding from last month of April, a check after deducting a cash discount. You see, so cash discount is what we're going to record. But what did he settle? He would have only been able to settle this balance brought down because that was in April month, right? April brought forward into May. So this is the balance here that he's going to settle. So if he's settling this bill and he's getting a 3% discount, we have to record that discount past the payment that he settled, right? So to reduce his account in 2021, on May the 9th, we have a bank amount that we receive money and put it in our bank, which is 5,600 multiplied by what percentage? Now, I know maths. 97 minus 3%, 100 minus 3% will give you 97%. So your 97% is actually what you get, right? But on May the 9th, you also give him a discount that you allowed Anil to get, which will be the difference, or 3% of the 5,600. So 5,600 minus 5,432 is 168, and that is really 3% of 5,600. So this 5,600 is what he's settling. However, he get 3% on it. So the 3% is discount allowed, and this here is what you receive in the bank. So when you add the both, right, reducing the asset, it must be equal to the value here. So 5,600 here, and these two added will be 5,600, showing that this account is cleared. Sent a credit note for 360 to Anil for merchandise received on May the 7th in a damaged condition. So you sold the man some damaged good. On May the 13th, you have to give him a credit note. You have to reduce his account, right? So that is what? Sales returns. Or you could put in credit note. Sales return, credit note, same thing, 360. Sent a check of 230 to Anil for overpayment made in the month of May. So March. So if he overpaid in the month of March and you now sending a check and you're not too sure where to put it in the account there, remember your check is leaving your account. You will be crediting your bank account. So obviously at a debit and an account. So here you have bank, showing that you actually pays back Anil for something that you owed him for on. So May the 15th bank for 230. And moving on, that was it, right? And then they ask you, show the balance brought down on June the 1st. So how do you balance your account once again? You add your debit side. You write it in pencil to the top. You add your credit side. You write it to the pencil on top. Sorry. You write it in pencil on top. You equal both sides. What is the difference? It's 2630, right? That is the difference. And that will be your balance carried on. At what time? On May 30th. 30th of September, 31st. Right? And on June the 1st, you now have a balance brought down of the 2630. And that is the close of your debtor account final. So you see, it's similar to the control account. It is not the total sales ledger control account or your account trade receivable or accounts receivable control account, but they actually give you an individual data, an individual sales ledger account itself to reconcile. So they have control over it, right? So this is another approach the examiner bring for students, and when they see it, they may have gotten confused. The last question we have here, I will not do it, go through, I'm just going to point it out for you all to see, because in effort of time here, I already had the question draft for, but I want you all to look at this question as well. Same June 2021, although they bring a debtors control account here, for how much marks? 8 marks, right? They bring the entire purchase ledger control account for you all to do for a 6 marks, and another part of the question, which was question 2D. So you all seen how important it is to know your purchase ledger and sales ledger control account. Quickly before I close off, all they did is give you a balance. Purchase ledger control is which one again? When you buy goods on credit? Right. So when you buy goods on credit, it's who your creditors you're dealing with, not your purchases account, right? So your main balance will be brought down on the credit side because it's a current liability. So your credit balance is 2940. Your balance brought down here is 1020. Totals taken from the books at the 30th of June 2021. So you put the 30th of June right through here in this question, right? So you put the 30th of June, make sure you put in that. Credit purchases of 124,410. Payments of trade payables, so you're reducing the accounts, you put your payments on the opposite side. Discount received, so you receive a discount, it's on this side to reduce the account. Interest charge on overdue account, so therefore it will increase your liability, putting it on the credit side. And a contra set off. So this was the only difference here. Contra, normally you will note once it's for the purchases ledger control account, it is on the debit side. And when it's the sales ledger control account, it will be on the credit side. Right? So you're dealing with the purchase ledger. So your contra set off will be on the debit side. Right? Most of the time, this is where you record your entry. So you could have that template and note that this is one thing different the examiner bring from all the other questions that you all will not familiar with. Right? And then they give you a balance for one side of the account for the 540. So all you needed to do is add this side, get the difference, and that difference would have been your balance carried on the debit side. So your balance brought down now on July 1st. Sorry, wrong row. Will have been 4980 and July 1st would have been 540 because you need to bring down the carry down balance on the credit side onto your debit, and you need to bring down the carry down balance from the debit side onto your credit. And this would have been for 6 marks. So this was 2017, 18, and 21 past paper question with the sales ledger and your purchase ledger control accounts. There were differences when they did the data only for annual. Then you see the contra. However, in this format here, I have the template for you all so that you all could always review the template and ensure that you all know what increases the account and what decreases the account and what side of the account it goes on. And in closing, remember your sales ledger control deals with what? Your accounts receivable. It is a current asset. So the main balance is on the debit side. And your purchase ledger control deals with what? Your accounts payable, which is your creditors. And the main balance will be on the credit side. It is a current liability. So any question before I leave?